Day 86. You built the simple moving average crossover strategy, two moving averages, a signal when they cross, logic to go long or get out. Now let us see what the numbers say. Run the backtest. QuantConnect steps through history. It fires every crossover signal your algorithm would have caught, then it builds out the full performance record. Here is what came back. Start equity was $100,000. End equity landed at $183,784.09. That is a net profit of 83.784%. The compounding annual return was 6.272%. Compare that to the buy and hold baseline of 1.914%. The SMA crossover more than tripled the annualized return. The Sharp ratio is 0.404. The Sortino ratio is 0.358, still below 1, but meaningfully better than buy and holds near zero readings. Drawdown hit 17.9%. Drawdown recovery was 703 days. That is the trade-off. To earn those extra returns, you had to sit through a much deeper trough and wait nearly 2 years to get back to the previous high. The strategy placed 69 total orders. Win rate was 53%. Loss rate was 47%, almost a coin flip. But the average win of 5.23% versus an average loss of 2.29% is what makes the strategy work. The profit-loss ratio of 2.28 means your winners were more than twice as large as your losers. You do not need to be right most of the time if you are right big. Total fees were $293.57. That is real money that came out of your returns because of all that trading activity. Beta was 0.488. The strategy moved at roughly half the volatility of the market. That is a decent profile. You captured meaningful upside without being fully exposed to every market swing. This is what a working trend-following strategy looks like in the numbers. Higher return, higher drawdown, more activity, more fees, but the edge is real.